Okay, everybody, it is Friday afternoon. Happy Friday. It's May 11th and time for another weekly wrap. This week was actually a pretty good week. Had a couple of good trade setups come in towards the middle part of the week there. Based on some of the analysis from last week, I want to go over some of those trading opportunities. This week's going to be fairly fast. I've just got some things I have to get done this afternoon. We've got, in case you were wondering, we've got a little bit of a plumbing emergency here. One of our purification tanks has decided to spring a leak for some reason. So you got to go take care of that. The water here in Arizona is absolutely atrocious. So the last thing I want to do is bypass this thing for another couple of days while we wait for a replacement. There. That's why this is going to be fairly fast. Remember last week I was talking about actual trading tactics and how to use some of this analysis. So let's just go ahead and highlight very quickly some of, I think, the most pertinent areas for the upcoming week. We've got the January high. We've got the December 2006 high. Now, it's important to notice that in this overall flag pattern here, okay, so this is a pretty big flag. You're starting to see a breakdown here of support. This week is now officially closed underneath the support area, and the market overall is pretty far down from the high here. You can see the high here. My apologies, normally that line only rings once. So the market is down considerably. This high up here, if you remember, was 2.0147. The market's down now at 98.19. So once again, the market has not been able to hold above this $2 level for very long at all. In fact, you can see as soon as the market got above the $2 level, things started happening. The first week here closed up, but then we closed down 2 weeks in rapid succession. Now we're starting to see a potential rise in the velocity. In other words, we're starting to see that the market is pushing down at a faster rate. This is what this velocity or this rate is necessary to break through support and resistance areas. Remember, you can think of these areas much like a brick wall or a wall in your house or your apartment. If you're going to try and break through a wall in your house or your apartment, you're not going to get very far if you're just standing right next to it and trying to push through it. But if you took a running start and you had some velocity behind you, maybe a battering ram or something, you could probably at the very least make a dent, if not break through it. Then on the other hand, if you come come at your wall in your house or your apartment with a Mack truck, it's not going to take a lot of velocity before you can break through. So those two analogies really do apply to the market. So if the market starts coming in with big orders, just a couple of those orders can push the market through support. The other possibility is that the market can take a running start so that it just keeps falling, builds up some velocity and some momentum. So even in traders' minds, they start thinking in terms of, hey, this market's gaining some speed to the downside. This is looking really bearish. The pound hasn't been able to recover, etc., etc. So we've got to be open to the possibility of a break to the downside. If you've been watching the videos, my member videos, you know I've been targeting this area right about the middle of the this consolidation zone, which is about 96.20. If the market can get going relatively quickly, we're probably going to be seeing the market retest these lows, which could be as low as 93.40, 93.50, but more than likely you'll see the market catch right about here, which is 94.20 area, just based on the support and the way this trading lane that the market has been in for the last several months. What I'm looking at with the trading lane is the market coming up off of this low here. Let me go ahead and make that black. You can see here we've got a decent trading lane now. The top end here, we've got 1, 2. In fact, I've been talking about this really since back here in November, December of 2006. And we've got these two areas here. So we've got our requisite 4 points to get this trading lane up, which of course